Hello, my name's Bob Chiesa of the Custom Benefits Insurance Group. We are a full-service insurance agency. We do clients ranging in size from one employee all the way up to several thousand employees. And we do all aspects of the employee benefits, whether it be the group life, dental, vision, or the disability and medical insurance. We have clients, as I mentioned, in 30 states, and we do 5 national associations. That's a very interesting question. For groups of 100 or more with the employer mandate of part of healthcare reform, that is required, where you cannot charge the employees more than 9.5% of an lowest cost ACA compliant plan. Now, while that applies to the 100+ market, it does not apply to your smaller groups. By true definition, for it to be an employer plan, an employer does need to contribute to the cost of the plan, but they are not restricted by that 9.5% like larger companies. Therefore, for the vast majority of the membership of the Hardware Association, the smaller stores do not have a mandatory contribution level. Therefore, they could offer to pay half of the single rate, they could offer to pay a third of the single rate, and there is no requirements that they have to cover the family. So many stores are offering to cover a percentage of the employee's rate, but then if they want to cover the spouse or the children or the family, that cost could actually have to be entirely picked up by the employee. As we know, the main players in the market are the Aetnas, the United Healthcares, the Cignas, Blue Cross Blue Shield, if you're not Anthem Health. The interesting thing that's gone down, and it's been challenging for many small and medium-sized employers, is that under healthcare reform, the rates now vary by age. So whereas in the past you might have 5 single employees and the rate was all the same, now that rate's going to vary. A single person that's 22 might only have a rate of $250, but you have a 58-year-old employee, that rate could be $650 or even higher. The beauty of the association plan is we've heard what the membership and members have been talking about. We've been able to keep the composite rates. So under the 6 plans of the NRHA Association, every one of them are set up the same way, whereby it's a single, double, single parent family rate. Also important to note, under the single parent rate, that doesn't matter if you have 1 kid or if you have 7 kids. It's still the exact same rate. So for an employer who's trying to do his budgeting, especially a hardware, it's a lot easier to predict when you know what that cost of that employee is going to be. It also keeps you out of trouble, because if you've got a qualified 23-year-old candidate and a very experienced 50-year-old candidate, if they have the same rate, you might go with the more experienced one. However, now under healthcare reform, if you're with a traditional carrier, that 23-year-old is going to cost you way less, even though they don't have the experience. The answer is yes. One of the beauties of the way this plan was designed and set up is we are not tied to one network or one carrier. What we're able to actually do is bring in the best network of doctors and hospitals via that particular store and location. So for example, you might have a store owner who has 2 stores, one on the Gulf side of Florida and one on the ocean side. Well, on the Gulf side, First Health PPO network might be the best network of doctors. On the other side, the ocean side, it might be PHCS. So one of the beauties of this plan is we can actually tailor the network of doctors and hospitals to not only each location, but figure out which works best for the actual employees. Because in the long run, the more they can stay in network and go in network, the more they're going to save, and then the better off the overall plan's going to work for everybody. We offer 6 standard plan designs, 4 PPO options, 2 HSA options. Out of those 6, the question's always asked, as I mentioned, can we offer 2 different plan options? The answer is yes, and actually as long as you have 15 or more participants, we actually encourage it. Number one, you do not have to contribute a higher amount to that richer plan. You can contribute the same amount to both plans, but you're allowing your employees then the option to pick and choose a plan that makes the most sense for them. Once again, if you're a very large employer of 100 or more, you're required to contribute, but that's only on the lowest base plan. So what many large employers are doing is offering sort of a base or bare bone plans, but then a richer plan. And if their employees want, they buy up or pay that differential. Smaller stores, as long as we have 15 people sign up, can do that exact same thing. Therefore, there's really no additional cost to the employer because they're not having to pay for that higher level plan, and yet the employees appreciate it because if they do have maybe a medical condition coming up, they might want the better plan, or if you know you have a pregnancy coming up, it would make all the sense in the world to go to the better plan option. We have two arrangements, both with Kansas City Life and MetLife, Snoopy, that we do have preferred discounts to the NRHA members where we can offer dental, vision, life, and even disability coverage to the members in a similar fashion to the way we do the medical plan. And of course, we all know dental insurance has been around forever, but now with all of us staring at our iPhones and the computers, it seems like vision has become one of the more popular benefits, and really the cost is very, very inexpensive. And to address, employer does not need to contribute for those contributions. Those could be offered on a voluntary basis with no cost to the employer because of, once again, the volume and what the association brings to the table.